Welcome back. You're watching IndianOpen right here on BloombergQuint Live. We're set up for a market that's going to open much below this morning in light of what's been happening with the US-Iran tensions that have escalated. We've got Asia as a pocket looking weak. You saw knee-jerk reactions across the board. However, things seem to have stabilized a little bit more. You've not seen them outright down and out, but Japan is still down about a 2% cut. You've got that. Shanghai is down about 0.5% plus, while Hang Seng trades under by about almost 1% or so. The SGX Nifty has actually showcased a pretty smart recovery. At a point in time, it was down almost 2%. It's rescaled 12,000 as well. So now down just under 1%. That's the intraday chart of the SGX Nifty. As you can see it from the lows that it pitched in today's session, it's actually seen a decent enough bounce back.
Yeah.
Good morning, Neeraj.
Good morning, Divya. And I think it's playing out in Shanghai as well. There's a bit of a bounce out there. So maybe the world markets look, I think the prudent strategy would be what we were talking yesterday, let's take it a day at a time. But I think during the course of the day, what kind of response comes in from the US could also have a big bearing. Though you've got to keep in mind something that we were talking in the morning. We also have the signing of the tariff deal with China on Jan 15th. So I think the world markets have a lot to look to. But I don't know what it does to equities, but it's certainly revving up the interest in safe haven assets like gold. I think that's probably the more predictable trade as opposed to what's happening in this unpredictable, volatile equity markets.
Yeah, but for India, as we were discussing yesterday as well, so heavily dependent on crude oil imports and the way crude oil is moving, that triggers the equity market mood as well, right? So you've got to keep a close eye on what WTI Brent has been doing. Yesterday we saw gold cross 1,600. We've seen gold cross $1,600 per troy ounce, come down, trading somewhere there, and crude oil 2.5% higher. So all of these factors will be closely watched. But also the other pocket to watch out for from an equity market standpoint is obviously the more liquid universe, which is the derivative space. Navneet is joining us to give us a quick wrap out of what happened in trade yesterday. Navneet.
Good morning to both of you. Well, we defended the mark of 12,000 on Nifty yesterday. Remains to be seen if that's the case today or not. Though SGX Nifty has definitely recovered from the lows. We've also seen, by the way, the Dow futures recovering nearly 100 to 150 points from the lower levels. Nevertheless, for Nifty futures yesterday, of course, there was pullback from the higher levels, and we did see some unwinding of positions coming by. Largely, the open interest remained unchanged, though the premium is still hovering around the levels of 50 to 60 points. For Nifty Bank, which breached and closed below the mark of 50 DMA in yesterday's session, finally closing around the level of 31,500 for the futures. Premium is maintained at about 100 points, and there were signs of some fresh shorting coming up for Nifty futures. Volatility index, some relief coming by after surpassing those levels of 15 on Monday, closing around the levels of 14.6. Let's see, due to ongoing tensions, geopolitical tensions, whether VIX goes above that mark once again or not. But in terms of overall put-call ratio for Nifty, we did see some bit of recovery coming by, 1.18 versus 1.11 in the previous session. There were signs of put trading coming back into the system. If you look at the distribution for this Thursday's expiry, that's tomorrow, in terms of call side, it's at 12,200, and on the put side, 12,000 is a psychological mark at. And by the way, we did reach that mark on Monday. So if you're watching out for any trading range, first up, 12,000 should be a support, and then the traders are watching out for 11,900 on the downside. So 11,900 to 12,200 is something that we will be watching out for. And yesterday, as I mentioned, there were signs of put trading. 12,100 and 12,000 strikes did see some bit of OI addition. Quickly then, moving on to stock futures, there were a lot of stocks which moved around. I think bucking the trend from the ID pack is Mindtree, where long positions have been seen. After a while, we are talking about GMR Infra, which is also at 52-week high, long position seen there as well. Biocon continued to witness fresh shorting in yesterday's trade, and cement stocks were up and about. Short covering was seen for Ramco Cements. Selling seen from the FIs in the cash segment, while on the index futures side, they are back net long on the index futures, though there were long positions added, 5,200 contracts. But look at the positioning on the option side, that speaks volumes. They are hedging themselves. We're buying a lot of puts, but they're also writing puts, indicating maybe the downside for this market could also be limited. With that, it's back to you guys.
Right, Navneet, thanks very much for that. I think we're getting an update there from President Trump, a tweet that he's just put out. All is well. Missiles launched from Iran at 2 military bases located in Iraq. Assessment of casualties and damages taking place now. So far, so good. We have the most powerful, well-equipped military anywhere in the world by far. I will be making a statement tomorrow morning. I don't know whether to...
How to read this?
Yeah.
Yeah, well, it's not outright damaging, which is probably a good sign. Let's see if this is a sign of whether things will not worsen too much and whether markets probably take heed of that.
You know, most commentary that I was hearing last night was that this is not symbolic. This is not a face-saving move by Iran. This could escalate into things.
I don't know, but this morning,
depending on whether there are casualties or not.
Yeah, but I don't know. A couple of guests who've come in this morning have said that they may not escalate as well. So it's difficult to read it right now. But what we can try and do best is how to navigate through this period of uncertainty. Let's try and do that. All through the next 1.5 hours, we'll try and get in experts to talk about that. We start off with Samir Kalra, he's founder at Target Investing. Joins us right now on the show. Samir, risk off or bottom fishing?
I think bottom fishing for me. Especially in mid caps. I don't want to enter large caps because, again, whatever happens, even if you see on Monday, the large caps took a better and a bigger hitting, and Nifty moves more. I think even yesterday, Nifty was underperforming the mid caps in the broader market. So I think if you're in the broader market now, I think that becomes a little rewarding, because over there the downsides are already clabbered in last 12 months or 24 months. So the downsides are much more protected over there. So I think if you nibble in right now also, I think it's a better time to start your, let's say, SIP or investments now in the mid caps, rather than putting that money into large caps and bottom fishing over there. Because any 10% kind of a downfall on a Bajaj Finance really doesn't make sense to buy in right now, rather than buying a better off mid cap in this sense.
Yeah, well, let's wait and watch how this next hour shape up. But just wondering, what would you do with the oil sensitives though? Even if there is a stock which is fundamentally solid, I think Devina was making this point that because crude is such a big impact, not just on the economy, but otherwise as well. What do you do with oil impacted companies?
So I think OMCs and aviation will be the first major hits. OMCs at a large, because that's more of daily adjustments which they have to do. So that becomes a major area of concern, and it's better to stay away from them, whether divestment or any other triggers, positive triggers are there or not. But I think for first 6 months, it's better to stay away, because the volatility and the risk premium to Brent now. So earlier the base was taken as $60. Now it might be taken as 65. So when the base shifts, it's better to stay away from OMCs and aviation, because their cost also adjusts and their risk hedge also adjusts accordingly. So I think it's better to stay away from these two sectors, at least for short term.
Earnings season going to start soon. We've already started seeing Q3 updates coming in. A few of them have been good, a few of them have been just at par. What do you feel this earnings season is going to look like?
So I think it'll be a little disappointing on the consumer side, because people have taken a forecast that, you know, the consumer spending has really gone up in November and October due to the festival season. But I don't think so. That will be more on the wholesale end. These are more sales on the retail end which have been reported, and they will not convert into numbers for a lot of consumer companies. So you might see a tepid growth in consumer staples especially, and consumer discretionary to a certain extent. The only place where I see a little positivity will again continue to be financials, and to certain extent certain mid-cap companies, because they have formed a base in their fundamental quarterlies as well, and they've come out of that volume growth and all. So I think over there will be a mixed bag, but for me it'll be still much more negative than more positives coming out of this season.
All right, and we get down to specific stocks as well. I want your view on IndianOpen Bank, Bank of America, Merrill Lynch has upgraded the stock. In fact, that's more details on that particular report with Shefali. We're going across to our research team now. She's going to talk about IndianOpen Bank, and then Samit's going to talk about the other stocks in news. But let me start off with you, Samit, first.
Well, firstly, Yes Bank, because they'll be meeting on January 10th to consider fundraising. Along with that, Tata Steel, because their arm, that is TS Alloy, has received a letter of intent for grant of mining lease for nearly 50 years from the Sorabil chromite mining block from the Odisha government. Navin Fluorine because they have commenced production on the company's newly added capacity in Madhya Pradesh. Ensar Industries because they came out with their quarterly update in the Q3. The company is saying that the cement production was down nearly 23%, while dispatches, that is sales, were down nearly 22% compared to last year. NBCC because they have said that they have secured businesses worth nearly 1,090 crore for the month of December, and then a bunch of stocks on the back of the defaults that they have done. The list is Suzlon Energy, JP Infratech, Reliance Communication, HCC, Gayatri Projects, Religai Enterprises, Reliance Power and Reliance Naval, which have defaulted on loans ranging 83 crore to close to 28,800 crore on December 31st.
All right, Samar, thanks for that. And IndianOpen Bank, new target price, new upgrade coming in from Bank of America Merrill Lynch. What do they have to say?
Well, it's a big upgrade from 1,500 to 2,000 rupees a piece, and a buy call versus a neutral call earlier. In a couple of factors, they think that both micro and macro tailwinds are going to work for the banks. At the micro level, the bank will be able to address most of the investor concerns going forward in this year. And if the macro recovery is stronger, that'll be an added bonanza. So to talk about the micro level, there are a few investor concerns, 5 of them which the bank will be able to address according to the brokerage house. They think that the auto or the CV exposure, mid-corporate exposures are likely to be addressed by first half of FY21. The quality of both liability franchise and fee income growth, that's likely to improve. And the provisioning coverage ratio, which is low for the bank, that is also expected to improve to 60% by as early as the third quarter. So the earnings that we are expecting, that one figure that we should be looking forward to.
All right, Shefali, thanks very much for that. Samir, what do you make out of IndianOpen Bank? I mean, the list of positives is there, but is there anything else that is better than an IndianOpen Bank at this point? An ICICI Bank, for that matter, Axis Bank. What would you prefer?
So for me, I think Axis will be a more preferred bet because IndianOpen still has a lot of exposure to CVs, and then there's a management change. Thirdly, if you see, the Bharat financial exposure is still very limited in the financials, and it might come up in next couple of quarters. So I think these 3 factors are still to be watched out for. Axis raised good amount of money. They have subsidiaries which can really do well in next 24 or 36 months. So I think over there the potential and the growth strategy, they've started with two-wheeler loans last quarter. So I think these kind of strategies really help them outgrow the system right now, and I think it's a better bet as of now.
You've been bullish on Axis for a while now, but I mean, just wondering if indeed IndianOpen, the BOFA note speaks about the resolutions that IndianOpen may reach. If indeed 2 or 3 of these things come out, then is it offering? Axis may be peak position, but is it offering that upside, or would you just leave it? It's okay to leave it alone.
No, it's Neeraj, what's happened with IndianOpen is the SME and the CV cycle has really burned them up. And if they're able to resolve the CV cycle for me, rest Bharat financial and management change will take time. I'm aware of it. If they're able to come out of that really well in the next 6 months, I'll still bet some part of my proportion to IndianOpen. I'll not totally be away from it because they have now the scale of Bharat financial that is a positive. So it's a negative as well in the short term, but over long term, I think Bharat financial network is really positive for them. So that can really overturn and give them an edge in next 9 to 12 months, I think.
Okay. The other bit is this announcement of a Navin Fluorine. I don't know if you got a chance to look at it, but I was reading commercial commencement. Now I was reading a report which said that Navin Fluorine for the longest time had not announced any capex despite having balance sheet. Now they've done that. They did that X months ago. Now that capacity is starting production as well. All of this, is it a net positive for this company? Is it a good enough stock to buy right now as well?
So I think it's a good place to start your SIP because once your commercialization happens, the ramp up actually happens in the next 6 months. So it won't really show you in Q4 numbers, but I think Q1 numbers that will actually come up really nicely in them, and it will give an edge on YOY numbers for next 3 to 4 quarters. So pricing may be an issue of those products, but I think volume growth will really pick up to 30 to 40%, and that can really bump up the valuations as well. So it's a good place to start your SIP if you've really missed out on this.
Do you see any material change for any real estate players in terms of the number reporting? Since they had moved to project completion based revenue recognition a year and a half back, do you see any of that getting reflected in the upcoming quarters? Yesterday was Godrej Properties in the last half an hour of trade saw a big spike.
So I think for them, see what is happening for these kind of accounting changes, the people who are in JVs are better off because again the JVs, certain part of execution is already there on the books, and their JVs are more in quantitative number, and they are able to spread the revenue recognition throughout a lot of projects. A person like a Oberoi or a DLF who are doing majorly on their own take a little while to recognize that revenue because the construction is all on their books. So I think Godrej and to a certain extent Shobha takes that advantage of having those JVs, but I'll still bet on the wholesome construction companies rather than having the JVs, because the valuations, if you see, of Godrej is like at least a 30% premium on the 5-year average. So I really don't want to enter a stock which is already trading at a 30% premium to 5-year. I rather enter a DLF or a Oberoi right now, or even a Phoenix Mills, which is still let's say 15% to a 5-year average.
It's very interesting. Sorry.
Nonetheless, in the last 6 months, these stocks have not done much except for an Oberoi. You've got Godrej, which is flat. You've got Soba, which is down 20%.
Yeah, the likes of Prestige, etc. have done well, and Phoenix Mills are the two names which have probably gained, but otherwise some of the larger ones, you're right, have hardly had any moves. But just before we get in our technical experts, I just want to mark the Shanghai markets as well. We'll periodically keep on marking what's happening to the Asian screen, but Shanghai should come up on your screen. It's now just about 0.4% off. It's almost as if Iran did not conduct anything. Now, whether this is the market's reading of the comments that have come in from Javad Zarif about how they do not seek any escalation of war, but only defending themselves against any acts of aggression, or is what everybody's saying that there's so much of liquidity sloshing around that every dip will be bought into is another question. But there's certainly some bit of a reversal that have happened in the Shanghai markets today. And we've spoken about what's happened to the SGX Nifty intraday charts too. But Shanghai is clearly showing a very different picture. Just about 12 points in the red, and SGX Nifty to just about 100 compared to about the 200 that we had when we at about 7:30, 7:45 a.m.
Yeah, and the point about liquidity that you make, I was listening to Victor Schwetz on the network, and he was talking about the possibility that if not, there's no chance that we could expect the central banks to scale back liquidity or pull back liquidity, if anything at all, because you'll see an immediate reaction on the PMI numbers, which will start to dwindle. So if anything else, there should be a possibility of pumping in more liquidity. And if that happens, then again, those riskier asset classes, that's where much of the money so far has been moving into. So could land up seeing more money moving there as well.
Yeah, but it's interesting. Riskier asset classes are moving up, safe havens are moving up. All is doing well. Let's get in our technical and derivative experts on board for the day today to talk about how are they reading into the current setup and what they do. Gaurav Bissa, AVP at LKP Securities, and Chandan Taparia, Associate Vice President at Motilal Oswal Securities. Gentlemen, both of you, good morning. Thanks so much for joining in. Chandan, just looking at the setup that we have at hand right now, what would your trading strategy be for the day on the indices?
See, we believe that volatile swings are likely to be there in the Indian market because the volatility index has bottomed near to 10-11 zone just 4-5 days back, and we believe that as we progress, this volatility can extend towards 17-18 levels in next couple of weeks as we're heading towards budget and the geopolitical concern. So in the scenario of the volatility bottoming out, the wilder swing could be there in the Indian markets. We have seen the scenario of the volatility continuously falling down in last 4 months. So that's why the volatile swings could be there in the market, and that's why upside could be kept. We believe that 11,835, that is the previous swing low made on the 11th December, is likely to act as a major support. So I think the volatility or this decline which is started in last 2-3 days may take a pause near to 11,835, but upside is likely to restricted near to 12,150. So the trading range which was earlier between 12,000 to 12,300 zone is shifting lower to 11,800 to 12,100, 150 level. Talking about the Bank Nifty, that is having the key support at 30,800, and we believe that it may find support and stability near to that zone. Talking about the trading ideas, recommending to buy on Ultratech Cement. Comparatively, we have seen that even after the market decline, this stock has managed to hold and finding bottom formation with buying interest in most of the cement counter. So recommending to buy on Ultratech cement for an up move towards 4400 with a stop loss of 4160, while recommending to sell on Canara Bank, which has given a breakdown from its major support trend line and expecting it to decline towards 196 and suggesting to sell with a stop loss of 214.
Okay, those are some recommendations that have come in from Chandan Tapriya. Chandan, I just want to come to you on HDFC Bank. What do you make out of this stock?
Yeah, talking about the HDFC Bank comparatively, we don't believe that major hit will be there. Already we have seen some profit booking decline in last 2 weeks, and medium term setup is not negative comparatively. However, we have seen some sort of consolidative move in this counter, some sort of profit booking and the call writing is visible, but multiple supports are intact in the counter, and we believe that support of 1220 could hold it on decline. And I think if it comes near to 1220 kind of level, one can even accumulate for an up move towards 1300 plus kind of level in HDFC Bank.
Okay. Gaurav Bissell is also there with us. Gaurav, you want to run us through your strategy on the index and what you're recommending in terms of stocks today?
Good morning. A couple of pointers. Beginning of the show, you were discussing about Shanghai. I would just give 2 cents from my side that compare the major indices right now. Shanghai is looking the strongest, and I would not be surprised if we see another up move coming in Shanghai index, and there is being reflected some part in the metal names as well. Indices in the opening, it will be very difficult for me to pinpoint. As just was showing 150, 180 points.
We've got it on a slight. Gaurav, we'll have to revisit this because it's coming in a slightly patchy line. We'll want your opinion, but let's just try and repatch that line. It happens sometimes. But since we're on the topic of even what ideas should be looked at, and Chandan spoke about a bank, but Chandan, if you can come in and weigh in on the ideas that you want to give for the morning. More importantly, while you've spoken about your specific ideas, what would you do with the metals pack in particular? Because there is a bit of a conundrum there. The markets are looking like perking up a little bit, but you never know what could happen to commodities in light of all these tensions. What would you do with a JSPL, a Tata Steel, a Vedanta?
Yeah, this right questions. And what I believe that usually whenever we see the geopolitical concern, metal stocks are taken down sharply, we see sharp sell-off, but that is not exactly happening this time. And somehow the metal stocks are holding the gains or respecting to their key support levels. And what I believe, even the Shanghai market, and if recovery happens, then some sort of buying interest could emerge in the metal stocks from the lower level. So looking at the same, I believe that Tata Steel could be bought on decline. Even after the market selling, we have not seen any major decline in the counter. In fact, yesterday it recovered, and day before yesterday when market fell down, it hardly corrected by more than 1%. So I think the support of 460, 462 could continue to provide a major key level, and because of the support of 460 slow and steady, this stock has potential to move towards 490 to 495 level. Talking about the JSW Steel, and I think some sort of profit booking decline was seen, but again it may find support near to 255 kind of level. So compared to all, I'll prefer to go with the bottom facing in Tata Steel if it corrects to lower zone.
Okay, that's a quick take on some of the metal names that could be the center of attention in today's trade too. Z Entertainment yesterday was up about 2.5%. I think the second best performing stock on the Nifty 50. Reliance Industries has been holding steady ground, so 1524 on Reliance Industries yesterday. And then you had a few losers, Bharti, Infratel, BPCL and Infi. Samir, now as we're heading into quarter 3, Infosys kickstarts with the big IT names. Do you feel that this quarter would probably be something that we saw the last quarter where a name like HCL Tech would do far better?
So I think 2 factors over there. If you see Infosys and TCS, the execution on the contract side has slowed down past couple of quarters. The revenue growth is coming off a little bit. Where I feel the large caps, the bank spending, especially in the year of election, really slows down for US. So the BFSI content will come off. HCL Tech will get help from the acquisition they've done recently. So like to like basis, they'll still be the same, but if you take into account of the acquisition, they'll perform better. But I still feel, Infosys or TCS are much more now cash plays for investors. They are more buyback plays. They are more driven by, the amount of cash outgo they give out of the profitability. And HCL Tech might be the capital appreciation play. So I think over there HCL Tech takes a bit of ahead of the whole rankings, but I think Infosys and TCS are still better off to be played out.
Okay, so better looking IT plays are the larger ones.
Yeah, I just wonder, Devina, how would IT react today in light of the fact that there might be some currency move towards safety of sorts, so to say, and the fact that while we're talking about geopolitics globally, the domestic data isn't the most optimistic, isn't it? And that might have some bit of bearing on the currency as well, because the market
5% is very disappointing.
Yeah, and the market would want to, even though it was estimated, the market would want to take cognizance of the fact that the fiscal deficit numbers will be lower as we know it. And what if there's some more slippage out there? So maybe there's a bit of a worry on the currency front in the lead up to that. I mean, the yields may not react too much because of Operation Twist, but the currency is a different beast altogether.
Yeah, yesterday though we did see some bit of strength coming back in light of what the rest of the globe did too. So from levels of 72.05 or something of that sort, we came down to about 71.83. So could see a deterioration in today's session too. Gaurav Bisa, I think, is back with us. Gaurav Bisa, any trade that's open on any of these rupee-sensitive companies?
Generally, when you talk about USD INR, the first name that comes to mind is the IT space, and among that, analytic technology interesting. Good amount of volume participation in last few days. A flag breakout on daily charts. If you look at the event, even that is seeing some interesting build-up happening. So there's a possibility that it can go towards 1720, 1720. One can keep a stop loss of 1630, 1625 and be long in that name. Apart from that, some Infosys can move up, but currently is stuck in the range. So the bias would be positive, but if someone has to pick one stock, then I think analytic technology is what I would be recommending for that.
Okay, we'll watch out for that as well. Now, the other set of companies that you got to monitor as we hit the peak of the earnings season starting next week. Of course, IT begins earnestly in this week, and which is the likes of Infosys, etc., which start off. So that is one important facet to monitor. The other set of companies which will start coming out with numbers pretty on early are some of the financial names. Now, Samir, my question is this. The updates that have come in from both Hdfc Bank and Bajaj Finance point towards a slightly chalk and cheese kind of a behavior, though I would say in line with guidance for Bajaj Finance. My question is, if Hdfc Bank is gathering the lion's share of the deposit market, and one would presume that maybe Kotak might also have done that simply because of the safety asset factor, what happens to the smaller size banks? I'm leaving out an IndusInd, it's not as small, but what happens to RBL, what happens to City Union Bank, what happens to Federal Bank?
So I think for them it becomes very difficult to get those deposits, and the cost of deposits might increase over there. So the cost of funds eventually, if you see for these smaller banks, might have bottomed out in the certain sense, and these cost of funds will start on rising for them.
Okay.
So that's why it will have a pressure on NIMs, because at the same time a bank like RBL is having an asset quality issue. So that also adds to the credit cost. So I think over there now these kind of valuations look good in the hindsight that they have come off, let's say 40%, 50%. But if you see overall situation financially and fundamentally, they are facing a big constraint. Federal Bank is still not away from the floods issue, the SME issues. So that's why the reason of having that kind of a valuation running on for, let's say, past 3 months or so. RBL has its own quality issues. The cost of funds might increase for them. So the risk is very different for them. So it's better to stay away from these banks now and bottom fish not on them. And maybe, let's say, a tier 2 like maybe a AU small finance bank can really outperform from here as well. And I don't want to bet on these microfinance or Jeevan or Equitas, but the only point is certain times they will be better off placed than even a federal bank because of the national presence and the reach out there. But I'll still prefer a AU small finance bank, maybe a Axis and a ICICI, but not go beyond into a federal bank and a very regional located banks, because that becomes a big issue when the cost of funds really start to increase.
Okay. A couple of other stocks that we should monitor are stocks which moved around in trade yesterday. So Alkyl Amines, for example, had an 8.5% uptick in trade. Big move out there for that one, so do watch out. We already spoke about Godrej Properties having that 5% uptick, so that's the other one that you need to monitor in the session today. Do watch out for both of those names. Last but not the least, life insurance players had some upticks yesterday. The likes of Hdfc Life, for example, had that little bit of an uptick, 1.5% to 2%. Expensive names, but still finding favor. Chandan Tapari, I want to come in on the life insurance companies, Hdfc Life, SBI maybe, or even an ICICI. It's kind of lagged the other two. But is there a trading opportunity in any of these three names?
See, we are quite positive on most of these insurance and AMC company, and we believe that slow and steady, if someone is looking for positional point of view, then these companies can deliver good set of momentum. However, on short-term point of view, consolidative move could be there. If I look at the State Bank, SBI Life Insurance, this has been consolidating the range and having multiple hurdle near to 1010 level. So it may surpass that level. So any decline is the buying opportunity with support of 950 for an upside move towards 1020, 1050 level. Talking about the ICICI Pru as well, this is also bottoming out with consolidative move of last 6-7 weeks. So I think 465 could act as a support. So comparatively more positive stance as of now on SBI Life, followed by Hdfc Life and then ICICI Pru.
Okay, we'll watch out for some of these insurance names as well, but 49 seconds to go for the markets to kickstart trade, and Asia showing the downtick. So we'll start off lower, Devina. The question is, can we build on from there, or will we succumb to some selling pressure?
Yeah, let's hope that yesterday's move probably works today, where we've actually seen a reversal in the second half. So if we open lower, let's see what the rest of the globe does. So far, we've recovered from the lows of the day, so that's not looking bad. SGX is still down 100 points, though, so you are going to see that negative bias as we open up the trade. Pre-open, though, focus is going to remain on some of the larger names as well, and banking stocks, what they do, because they seem to be the driver either on the upside or the downside. Yesterday's session saw a pullback about 400 points of the Nifty Bank after a drawdown of 850 points the day before. So that's going to be an important watch. HDFC Bank, HDFC Limited, these are the larger names out there. 1.8% lower for the Nifty 50. Again, too early. Sensex is actually showing an uptick. So a very divergent move on both the indices. We'll wait for these prices to come off and consolidate a bit more. In the meantime, let's look at individual stocks as well. So what's doing well? I want to start off with that and then go down to the losers. While obviously the flavor of the market is still negative, but you have a few gainers. Maruti is up 1.8%. Eicher Motors is up 1.8%. Bharti Airtel is up 1%. Dr. Reddy's Labs is up 0.8%. TCS, Tata Steel are some of the other gainers. Amongst the losers then, Bajaj Auto, that's showing you a 4.8% cut. HDFC Bank, a bigger knock there. So that's the banking pack again that's taking the charge on the downside. Reliance Industries, a heavyweight. Again, a very sharp swings that are happening in a matter of a few seconds. Again, pre-open, so 908 is where we actually see them consolidate. SBI is down 2.5, so 310 now for SBI. Asian Paints at 1675. Titan, after 2 days where it held out pretty okay, is now down 1.5% or Grasim, UPL, Power Grid, L&T are some of the other losers. Currency is back below 72, so 72.02 to the dollar is where the rupee is currently trading at.
Just a couple of stocks. I think we'll wait for these rates to stabilize, but Navin Fluorine is a stock in focus, so do watch out for that one, and let's see how that one reacts to the piece of news. And some upgrades that have come in on sale as well as JSPL, at least the target price uptakes that have come in on sale at JSPL from HSBC, though in today's session it will be difficult to see. JSPL is in the green, quite interesting. Let's wait and watch what happens during the course of the day. But early days as yet, let the rates stabilize and then we'll try and talk more about them. The Nifty may start off in and around 1% lower, and let's see where we take on from there. I think a lot of queries would be around these commodity names, and therefore I know we spoke to Chandan about them, but the specific two on which there has been an upgrade as well. Gaurav Bisa, you want to come in on SAIL and JSPL. Chandan mentioned about these earlier, the larger pack, but the strength, the inherent strength that we've seen in the steel companies vis-a-vis the other companies. Could SAIL and JSPL defy the trend today or the next few days?
Well, if you could look at SAIL, we have already seen a good move coming in, and there's some amount of resistance at the levels of 48 to 50. This particular zone has been again a strong deterrent. So I will be a little bit skeptical as far as SAIL is concerned. General Steel, though we have seen a very volatile move sort of coming in last few weeks, but there's still some scope left. If we see the stock holding above the levels of 172, 173, which is the immediate hurdle area, then a strong move towards the 185, 190 can be seen. So in my opinion, if one has to look at the among the two names, then I think it would be JSPL. If it trades above 172, 173, keep a 3.3 or 4 rupees stop loss on the upside. 184, 185 is what I would be looking at.
Okay. You know, the other one which is showing some tremendous inherent strength the last few days is GMR Infra, and from the looks of it, it's early days as yet, I repeat, but it is looking like starting off slightly positively in today's session as well. GMR Infra is 1.29% higher, 23.5 currently. Early days, as I said, but let's wait and watch how this one shapes up in the session. So there are these select name band of stocks which are doing that. The other one, and Sameer Kalra come in, the other name which is doing remarkably well is Aarti Industries.
Yeah.
The last few days, I mean, while some of the other specialty chemical companies may have come off, Aarti is knocking on the doors of 900 now.
Yeah.
Do you like this one, or are there more? Are there other bets in the specialty chemical space that one can take right now?
So Neeraj, specialty chemicals remain on a preferred bet, even
as a space.
But if you see specifically Aarti has spent a lot more on R&D in past couple of years and continues to do that. So that's why it's helping it to introduce new products, which is helping the capacity to ramp up. So that's why I feel Aarti is in a better balance sheet, better cash flows out of the whole lot, and they are able to put that cash flow into a better use. So I think on the long term, if I really need to play out, I'll put a bet on Aarti as compared to others.
Okay, you'll bet on Aarti compared to some of the other names. Okay, fundamentally, well, Sameer likes Aarti Industries as a name to monitor. The other set of stocks which have been focused today are the oil marketing companies. Now, Chandan, come in here. The stocks have already taken a beating of a fair degree, but with the crude prices looking or believed to be on the higher side because of all of these tensions, and we don't know which way these will ease, what would the bets be on HPCL, IOC, hell, maybe even a BPCL?
Yeah, expecting weakness to continue in most of these names. In fact, the structure is quite weak. Most of these stocks are making lower top, lower bottom. In fact, HPCL has recently also given a breakdown even after being in the negative trend. So I think weakness could continue till it remains below 253. HPCL has potential to go down towards 230, 228 kind of level. Even Asian Paint also looks weak. BPCL, which is broken the support of 474. Now resistance shift to 470 for the downside target was 445, 447 levels. In fact, Asian Paint also looks weak, which has broken the rising support trend line on the daily and the weekly scale. So that's why we believe that it can retest the 1680, 85 kind of level.
Okay, that's Asian Paints for you. Remember, all of these names, you've got Berger, Asian, last few months have not been bad at all. In fact, these are the places where you've seen much of the money going in. But now, are they getting a bit too heady? Valuations have been a bit too steep on Asian Paints as well. And Berger, after its recent run-up that we saw in the last 6 months of the year, has become that much more expensive as well. Do you feel it's worth the buck on any of these names?
No, if you see, the whole lot is trading at least 40% of their 5-year average P. So I really don't want to enter that phase, and especially when they have a good 2 quarters, and I think second half might be not that as great as the first 2 quarters, and there might be a growth tepidness coming in on the decorative side. So it's better to stay away right now and maybe wait for another 6 months to play it out. And paints, any which way, if you really want to bet out, I think Asian Paints is the favored bet right now for them.
All right, Asian Paints over Berger. So that's what you've got, 1695 on the counter. Gaurav Vissa, would you see an interest in Avanti Feeds? Yesterday, once again, surpassed 600, had been holding strong. One-day aberration that we saw where the markets cooled off, and so did the stock. Do you feel that this stock at levels of about 550, 570 is a good bet to enter into?
Yes, if you look about the levels of 570, then yes, it is very interesting. If you look at the weekly charts, it has given a flag breakout, which is a continuation pattern breakout, and the volumes have been quite interesting. But at the current levels, the risk one might not be that favorable. But any dip, as you mentioned, 570, 580, that would be very lucrative. One can keep a stop loss of 540, and on the upside it can go towards level of 640, 645. So in my opinion, it's a wonderful stock to buy, but I would not recommend the current levels. Any dip can be bought into.
I believe, Gaurav, you have a few other stocks that are on your radar, or what are the stocks that you're watching out for?
The first recommendation would be buy on Pidilite above 1405. You've seen a small breakout sort of coming in. Some amount of additions has already been seen in the OI segment. Target of 1450, stop loss of 1390. UPL is another name. After a good range consolidation has come out of the range, it's sustained the breakout levels. Stop loss of 585, target of 610, 615. And Tata Steel is a vulnerable name, a bearish harmonic on daily as a weekly chart. One can sell towards 480, keep a stop loss of 495 on downside. 450 is what I would be looking in Tata Steel.
By the way, as the pre-open rates have settled down, now we have the rates, save for Yes Bank, which is up about 2.66% on this news about the board meet for the fundraising. Almost every other stock in the red, though I must say IT is weathering the storm very well. I won't call it a storm really as yet, because it's just about less than 1% lower for the Nifty. The Nifty Bank is showing the larger downtick, but TCS, HCL Tech, etc. might still stay okay. Yes Bank up about 2.5%, and Tata Motors, BPCL, SBI are amongst the names that have come off. SBI has been facing the brunt of selling along with ICICI Bank the last couple of days, mind you. And I wonder, in part, I mean, we're talking about how banks are going to get the monies back over the course of the next few, and we've seen these large number of defaults as per the mandated guidelines by a clutch of companies amounting to over 60,000 crores for December 2019, and a clutch of usual suspect names out there. Are we staring at one more round of asset quality issues for some of the corporate facing banks? I think that's the question you got to ask, and maybe, just maybe, that could be one other reason why the likes of ICICI Bank have come down from 550 to 510 or 520 or thereabouts, or SBI is currently lower at about 316 or 312 or thereabouts. So some of these corporate facing banks are certainly pulling back. We're minutes away from market open. Let's tell you all that you need to know to stay ahead in trade today. First up, Iran fires a series of rockets at US air bases in Iraq. Iranian foreign minister tweets that Iran does not seek escalation of the war. SGX Nifty recovers from the day's low.
Suzlon, JP Infra, Arcom, HCC and Gayatri Projects are among the many companies defaulting on loans that were due on December 31st, 2019.
Yes Bank will hold a board meeting on Friday, January 10th, to consider raising of funds.
Navin Fluorine has commenced production at its newly added capacity in Madhya Pradesh.
And amongst key brokerage calls, Bank of America Merrill Lynch has upgraded IndusInd Bank to a buy from neutral. It has also hiked the price target to 2,000 from the earlier 1,500 rupees.
All right, that's what you've got, IndusInd Bank there. But it's par for the course. I mean, the market mood itself is not all that great this morning. So even though you've got this big target price uptick that's come in, the stock is down about 1.5%. Looking at the broader market space, it looks like at the end of pre-open, the breadth is extremely weak yet again. So closer to 1:8 in favor of the declines this morning. And aside from your usual losers that we've seen, it seems like everything is down and out. Sterlite Tech, for one, is at 118. That's down 4%. DLF 2 is down about 3.5%. Godrej Properties is down, but lesser compared to some of its other peers. I think 1.6% lower, so 955 from a high of about 974 that it touched in trade yesterday. L&T Fin Holdings, that's lower as well. IRB Infra, Chambal Fert, Avanti Feeds down 3% in trade this morning. Allahabad Bank also lower as well. What's your take on SBI, Samir?
I've been a little negative since last 2 quarters because see, when your GDP growth was 6.5, 7, you were still having NPA issues from the corporate end, and the cleaning up was happening. Now when you've reached 5 and the consumption has slowed down and SMEs are taking a big burn, so I think retail and SME will be the next 6 to 9 months kind of a making issue for all these banks, especially the PSU banks, because they have a large exposure over there. And their cost of funds over there is higher. And I think over there the whole safety margin towards SME and retail being, known that certain part will come off as an asset quality issue. Now that part might double out in next 6 to 9 months. So that's where I think all these PSB banks will be caught off guard, and SBI might be the first one to bear the burn of the whole situation.
Okay. However, we'll wait and watch as to what these resolutions bring about for SBI as well. Stocks at 312, nowhere close to its highs for about 350 that it hit, I think, a month and a half ago. So that's one stock to keep an eye out on. Anything else, Samir, that you're liking?
So I think if you see underneath, there's this company called Laurus Labs. That's one of the small cap pharma companies, and they're doing really well in terms of now. If you see last quarter, they've really outperformed the past couple of quarters. Their balance sheets are quite constrained on the cash flows, and they don't have much of debt. And their R&D is much better off in next 6 to 9 months. The pipeline is coming off better. So they have a lot of WHO contracts. They have more of generic play, but they are entering into a couple of specialty products which might come up in next 9 to 12 months, which right now taken into the valuation as compared to other larger, because that's not a like-to-like comparison, but they're at least 30 to 40% of discount what they're running off.
Laurus Labs it is from Samir Kalra, and compared to some of the other pharma companies, this is the one that he likes and the reasons thereof. Samir, take a moment to thank you for joining in today on a very important day, I might add, and let's see how it shapes up. But Samir Kalra's view is that he's going out and doing SIPs, if at all, and buying the dips into the mid-cap companies and not necessarily the large-cap companies. In a bit, we'll get in more market voices too, but less than a minute or about a minute away from market open. So maybe a good time to actually first get in the top trading calls from our experts. Chandan, to you first. Your top call for the morning today.
Yeah, selected to be with two trade. Selling Canara Bank. So looking at the market sentiment, I'll be with selling on Canara Bank with a stop loss of 214 for the downside target was 196.
All right, Gaurav Bissa, what about you? What's going to be your top call for the day? I don't think we have Gaurav Bissa on a good line, but I think there are 10 seconds left needed, so I'll hand it over to you.
Yeah, thanks, Devina. Well, let's wait and watch how badly do we start off. We'll start off about 1% lower for sure. The pre-open rates have already suggested that. The question is, can we sink more? Well, here are the rates. Actually, not 1% for the Sensex, less than 1%, but near about that, about 0.92% for the Nifty 50, 110 points lower. Sensex about 355 points lower at about 0.9%, and the Nifty Bank 410 points, about 1.3% lower. Not as bad as we would have thought at the start of the trading day when the SGX Nifty was down about 150 at about 630, 645. The mid cap and the small cap indices will come up on your screen, and let's see if they are also showing some resilience. The small caps certainly are. This is not a reaction of a market which believes that there is an imminent war-like situation. More the reaction of a market which is looking at uncertainty but doesn't quite want to believe that there will be a situation which will get aggravated. However, naturally so, the market breadth is bad. But again, keep in mind, the top loser is BPCL, down just about 2%. Then there is Vedanta, SBI, Hindalco, etc. It's a very interesting mix of names because you don't quite know what these stocks will do during the course of the day because they have not started off too lower. Vedanta, SBI, the commodity names, select banking names are all correcting today. We don't quite have a Reliance or an Hdfc set of twins in the top 15 losers. Hdfc Bank may be 1.5% lower now. ICICI Bank is % lower, and that is what is dragging the index lower, the Bank Nifty lower, that is. What is doing well? Bharti Airtel in the green after the bit of a correction that we saw in trade yesterday. Yes Bank 3% ahead of the board meet scheduled to presumably raise funds, and TCS, Infosys, Tech Mahindra, ITs showing some strength. Yes, it would be in the red. Wouldn't be surprised if the markets don't react too negatively from here, that IT may well make its claw its way back into the green. Mind you, it's a very resilient pack right now in these times. Just a couple of other pockets that I want to highlight. I mentioned how BPCL is the top loser. Let's look at the entire oil marketing space and see what those stocks are doing. So BPCL is down about 2%, HP is down about 2%, and IOC down about 1%. So that's the OMC space. And then a couple of stocks which are in focus today because of the HSBC upgrade, JSPL as well as SAIL. Unfortunately, even though the price targets have been upped, the stock's not quite reacting today. Devina, what are you spotting?
Well, more losses than gains. And before I get into individual stocks, I want to look at the market breadth. So 147 stocks is all that you've got in the Nifty 500 that is advanced across the board, actually, not Nifty 500. The NSE, 1,012 stocks that have declined. on the broader market side. So you've got a 1% cut on the index. What's losing in terms of in stocks, 5% lower for KRBL. HCC is down 5%, a smaller penny stock though. Gen Irrigation, again a penny stock. Sterlite Tech, 119 on the stock. Sugar stocks have looked weak. So in the last 2 days where you saw some amount of moves on stocks like Sri Renuka, Balrampur, Bajaj, and Praj Industries, all of that has been reversed in today's session, a mild give back of sorts. GMDC, Interglobe Aviation, Orient Cement, remember yesterday Sri Cement did well too, so you should pull up that stock to see how it's doing this morning. But my guesses are that everything is down and out. So while Orient Cement is down 2.8, Sri is down 1%. You've got Allahabad Bank, Igarshi Motors, IRB Infra, ITI, remember, ITI Limited was up 13% yesterday. A good show for quarter 3. Today, a little pullback, about 3% under for ITI. Edelweiss is down, Punjab, PNB Housing Finance is down, IOB, Bank of Baroda, all of them looking weak in this session. So the list of losers is quite long. I don't think there are too many gainers, but you've got Navin Fluorine that's doing well, and HT Media has marginal gains this morning. So that's what you've got in terms of the broader market move.
Up, Amit Khurana, Head of Equities and Research at Daulat Capital Markets, also with us. Amit, what is it that you've told your key clients today to do with regards to Indian equities in such a scenario? Good morning.
Hi. So our view is that the next few days you will see elevated levels of volatility playing out and India risk premiums could go up. Now the news flow is so volatile that every hour you keep getting new tweets and new updates from various channels, so it's difficult to really take a call. So our stance is, as of now, be on the sidelines, don't rush into buying at every low. And as we get into sort of the next few days, you will see either the tensions going really shooting up and there could be some sort of retaliation coming in. We don't know yet. It's very difficult to take a call which way it will go. But in that context, you better stay on the sidelines. As it is, India is not a cheap market amongst the emerging market peers, and we are far more vulnerable considering that the oil prices are elevated. The inflation pass-through will be quite sharp over the next few days. And therefore, in that environment, it's better to stay put, see as to how the events play out, and then probably take a call whether one would like to deploy some cash at lower levels or not. So as of now, we are quite sort of risk averse and not using these declines to buy into our preferred picks.
What levels do you envisage, Amit? I mean, I'm not talking about individual number on the Nifty, but do you reckon that this uncertainty, even if it doesn't escalate into something, can this uncertainty pull down the indices by 4 or 5%?
Well, it could very well be. I mean, you have to look at it in the context. Probably the geopolitical tensions came more as an excuse for the markets to correct. I mean, if you look at ever since the corporate tax rate cuts were announced in India in mid-September, we haven't really seen a major correction, and we've seen some of the, the more expensive stocks becoming more expensive in that context, while the mid caps and small caps continue to face the brunt. And as we got into the new year, our view was that there is a certain limitation that we will probably sort of reach in terms of how much of a premiums can these the higher price stocks can attract. So maybe it's just an excuse that the market has taken to correct. But from a broader level, I would not be surprised that from the tops that we have seen while we got into the new year, we might give up by 4-5%. That's a very normal correction, nothing untoward. But the only apprehension which has got added to our view is the heightened geopolitical risk and the vulnerability of India, especially to those events. Now, if that goes off the table, I think 4-5%, 6% declines here and there on the broader indices and few stocks here and there will make us get back into the markets again.
Does the profile of investment change in terms of getting more riskier bets going in the portfolio versus being more defensively bent?
I'm sorry, I missed that point.
How would you organize your portfolio at this point, Amit, in terms of allocating money to more riskier trades, high beta trades versus defensives at this point in this uncertain market environment? Would you be loading up on the likes of IT, pharma, or would you still go for the slightly more riskier companies?
Well, that may be very, very tactical. So I would not really read that out as a strategy to play out, because it's going to be a few days here and there that you will see heightened volatility. In fact, as we got into the new year, we were actually of the view that you would possibly see a risk on trade happening in emerging markets, in commodities. We're seeing evidence of steel prices beginning to move up. In general, I mean, the US-China trade deal was taking the risk off the table, and therefore we were actually in a risk-on mode. As I said, this is too short term to call, and one doesn't know how bad or how easy it might cool off. But from a more sort of broader perspective for the year, we believe that from India, mid caps and small caps will be the theme to play out for. Sectors which have a flavor of commodities will be the ones to look out for. And especially, some of the PSU stocks, ex the banks, is something that we were keenly watching and backing up. Some of these, triple rated companies, very good profiles, very good balance sheets, 5%, 6% dividend yield kind of range, were our favorites, and they continue to be our favorites. I mean, there's no change on that stance. So in that sense, I would say we are still in the risk-on mode for the calendar year. I mean, leave alone these few days that one will have to just stay put and watch out very carefully as to how things work out. But we very much believe that the downsides for mid caps and small caps are very well protected. We don't see a significant decline of those valuations from here onwards.
Okay. Good recovery on the index, as we were just talking about it. 11,974, 78 odd points lower. This could have been any usual day. I mean, it's not a day that a major event is undertaken. So for our markets, probably, we've been talking about a whole lot about how India tends to whiplash a lot with the kind of global events. But the recovery has been decent enough. You're probably, looking at other key points of information to make a call on whether or not to invest in the market like this. Domestic flows up until now have been supportive in a big way. FI is not so much, but we're okay even despite that.
Yeah, but just that the bank Nifty is still down about 1.25%, but that notwithstanding, it is really a very muted reaction, which is probably not bad news, but volatile at its best, at the very least. Gaurav Bisa, how do you read into the open?
If you look at Nifty on daily charts and on Ichimoku setup, it has bounced not exactly, but very close to a very thick cloud level. Generally, thick cloud means there's a strong support, which comes around levels of 11,900, 910 on the spot side. So on that front, I'm quite happy that we have spread the cloud levels. And if levels of 11,900 are sustained, then we can move towards 12,100, 12,150 again. It may take some time, but we may go again. Fresh recommendations, if you get a dip again towards 11,930, 940, keep a 40-50 point stop loss and play for targets of 12,100. At the current juncture, the risk reward might not be that favorable. Coming to the bank Nifty, again, it is just about trading near the cloud support area on daily charts, which comes around levels of 31,080. So if it sustains upper levels of 31,080, today itself we can see a very strong recovery sort of coming in. So bank Nifty, you buy a little bit higher, as well as Nifty index, you buy a little bit lower.
Okay. Reliance Industries is holding okay, so probably that's helping support the index, while the Hdfc twins are not doing all that much, which is probably the reason why the Nifty Bank is drawing down. Hdfc Limited okay, Hdfc Bank's down 1.3 odd %. TCS, on the other hand, is actually in the green. So some of the heavyweights lending some support to the index at this point. Gaurav Bisa, anything that you feel that can be done? While obviously Yes Bank seems to not be a fundamental call anymore, but from a trading standpoint, would you take a play on Yes Bank?
No, I am totally avoiding Yes Bank at this point in time. If you look at last few days or if in a couple of weeks, what it has been doing is taking supports near levels of 40. There's a resistance at area of 50 to 152. So it's basically trying to trade in a range. As long as we don't see a breakout or on either side, even trading would not make too much of a sense. So for me, it's an avoid. But yes, one name that looks interesting, which we have spoken earlier also, is HPCL. It has formed a bullish harmonic because the alternate bat pattern. The trigger point was 233, 234. It has almost touched those levels and bounced back. So if it's trading about 235, we can see a good move around 5 to 7% we can expect in the next couple of days.
Okay, Gaurav, we'll leave it at that. Thanks much for taking the time out and being with us today and giving us your thoughts. Really appreciate your time. Amit, pray tell me, do you know what's happening with Adani Green? That stock is on a roll. Just can't seem to figure what's happening here.
Well, we don't cover that, so I can't
You don't
really
cover the
comment
group
on
at all,
that.
Amit? Okay,
We don't cover
yeah,
that as a
that was
stock.
maybe a question in joke, but
No,
the
we
one.
do cover the group, of course. We do cover the group, yeah.
Okay, so within
Sure.
that, one last question, Amit. Anything that looks interesting?
Well, watch out for the commentary in this earnings season from a lot of domestic infra companies. We understand from our ground visits that execution was expected to start picking up early part of Jan. If that has shown evidence of pickup, then maybe that will be one data point to look out for. Commentary wise, we're not expecting a very positive commentary from most of the consumer plays. I think it will be quite muted and it will be guarded commentary, as I would like to put it. So any any indications that volumes are coming back into the market, I think will be the one which we are watching out for, and that I think will really form the basis of how the earnings projections take place for the next 12 to 18 months.
Okay, and and then one follow-up, Amit, to that would be, at this current point of time, while you mentioned you are risk off, what are the pockets that you look to buy into once the markets come to your risk tolerance or valuations which you believe in?
Well, as I said, we believe that mid cap and small cap is the themes to play. So especially in those sectors, we like chemicals as a space, which has been one of our favorites for the last year. That continues to be there. We believe that agrochemical companies are on a much better footing now, and they will be one of those names that we will look out for. My comment on infra was in context as to if the execution starts picking up better for infra companies. These are all small cap, classic mid cap names. Those will be the ones that we will look out for. Those will be our preferred bets. I mean, I'm not getting into large cap names because while they continue to be a consistent part of the portfolio, but from a new allocation perspective, these are some of the new sectors in mid cap and small caps that we would look out to make an allocation to.
Okay, let's look at some other pockets of strength and weakness as well. Just before we thank Amit Khurana, while there's a lot more green on the screen, you would have to admit. So Yes Bank is up about 3%. Keep that at the back of your mind. TCS, IndusInd Bank, Tech Mahindra, Dr. Reddy's, and Reliance Industries has come into the green. So that is part one. What is not doing well? Larsen & Toubro is the top loser, down about 1.5%. Bharti Infratel down about 1.5%. Eicher Motors down about 1.5%. And Hdfc Bank and Kotak Bank too have reacted negatively. So that's the other pocket. Actually, Amit, that would be my maybe final question to you. The belief in November and December was that quality has run its course and it's prudent to get into some of the other pockets. Now my question is, with all the uncertainties surrounding, would you reckon that there will still be a flow towards the Hdfc Bank, Kotak Banks and the Bajaj finances, or would the other rung banks now find favor in 2020?
Well, if it's too short term, I mean, it's very difficult to make really a call on that. I mean, 5%, 6% moves here or there, very difficult to call for. And I would not really change my portfolio allocations or sector stance or our market view. We haven't changed that. So, for example, today morning when we were discussing the morning meeting, we didn't recommend selling India at large. I don't think that's the stance that we would like to make. Unless you really get into a full blown out conflict, then everything is off the table. I mean, then probably everybody will go for the exit door. But our stand remains that you have to be very, very structural in the sense that CY20 has got to be showing a much better diversification of the moves. So short term, you might get some money going into the larger, safer names, so to say. But I mean, if you have a risk on a higher risk element playing out, everything will correct. I mean, I don't think I mean even the best of the names will be able to really stay put. I mean, they may relatively outperform, but we're not really wanting to get into those kind of complex ways of analyzing. It's just that you stay out of the zone for a few days, see how events pan out, and then eventually come back to the names that you want to structurally buy into the recovery, into better visibility of earnings for the year, rather than just for a few days.
Okay, so interesting thoughts. Amit Khurana, take a moment to thank you for joining in today and giving us your perspective. Really appreciate your time. Well, as we said, this is just on the day as far as the Nifty reaction goes. The Asian screen too is not looking all that bad, as we said. If you just pull up the rest of the Asian markets, Shanghai in particular, Nikkei is still weak. So that one is still staying down, but it's no longer as low as it was. It was 1.8%, even when the other markets were recovering, now about 1.4. Shanghai has recovered a little bit, and the SGX and the Nifty too is not looking all that bad, though the Nifty Bank remains a bit of a concern, but otherwise it's not looking all that poor for our markets. Let's wait and watch what happens. We come back, talk and stick to this. Actually, this is the talking point. We discuss the outlook for crude and gold as the US-Iran tensions rise. Victor Schwetz of Macquarie Commodities will be talking about that. The risk to the equity markets. Andrew Holland of Avendus Capital Alternate Strategies, one of the largest alternate investment funds operating out of India, will be coming in and talking about that. Stay tuned to BQ Live.